So come, let us prepare, make some profits for the week. Let's do some quick recap here. This simple recap, very simply, you have to understand why the squeeze happened. And if you remembered, we talked about the squeeze plenty of times throughout the week. And one of the key indicators is the 5-day trending up together with the upper Bollinger right here, as you see it for yourself. Now, it's important if you have not, or if you're a new member here watching this, you have to watch the previous videos. The links are in the description. You have to watch the previous one, and that links to my thought process to the one before and the one prior. And you can understand the context as we link it up as the market moves. Now, many things seem to be easier to study on hindsight, but that's not a point in trading. In trading, you must learn to be preparing ahead, and with that preparation, you must know how to make certain trading decisions. So it's important you watch the videos that I make every day, and I appreciate you if you take the time to do that. And because as I mentioned in the previous video, we had one market cycle. In my opinion, this is one market cycle because we have retested the upper Bollinger, we have retested the bottom Bollinger, and we had a tremendous bounce. Now, this will make more sense to you if you watch the videos. And as I mentioned, this is a great opportunity for learning because within a month, 6 weeks, a month and a half, we were able to experience one entire market cycle in the trading space. What a great opportunity. So the best way to learn this is truly to watch the videos day by day. You can check back from the video prior to this. Trust me, this is the market opportunity for you. If you're not making money from the market, that's fine. But if the market presents to you a learning opportunity like this, you have to seize it. So please do watch the videos. If you are truly serious about this, you have to watch it. Now, members, there is end of day summary every single day. And if you can tie this up, you can tie up my daily analysis together with the intraday videos that I create and put them together. Understand the thought process better. Now, this will be spectacular for you. Right, so please do that. And this is why if you trade with me daily, if you show up daily, you catch the videos daily as I post them, you run through the end of day summary together with the live analysis every day as I review them, right? It doesn't take too much time for you. You don't have to spend 6.5 hours at the trading floor. This takes less than 30 minutes a day. I keep my videos short, less than 10 minutes per video. Together with the end of day summary, if you take 30 minutes a day just to show up, you will catch up. So this is the point of why I'm doing all this. So when you can understand the process behind this, this will be such a great learning opportunity for you. So please do that, and you will very importantly understand how I was explaining to you on averaging down, if you can, off the bottom Bollinger. Obviously you don't full pot as much as you can. Right, I talked about that. I talked about how when the 5-day starts to plateau, that's a good sign. I talked about how the upper Bollinger has to start trending down, so that's a good sign. I talked about how the 5-day starts to trend up and crossing about the 20-day. And this here was when I talked about the 20-day juicy liquidity. If you track back to the video, then you will see it for yourself. And thereafter, once we started pushing, I told you that there is a possibility of a squeeze. And we caught the squeeze right here on this day because you understood some of the very key intraday algorithms, which I will run through them later as well. And I also review the intraday algorithms in the 1-minute chart on the daily videos. So that helps you understand how you can use the daily chart, translate it into the 30-minute chart, macro structures, and translating it into intraday. And how are you supposed to maximize your profits in the various time frames? And you learn to use different forms of weapons for your trading. You have a very good repertoire of your trading skills. You have a very strong arsenal, and you're able to be deploying the skills in a different fashion when you're trading. So please, if you have the time, I do truly believe this is such a fantastic learning opportunity. One market cycle within a month. That's fantastic. You have the opportunity to experience this. The next best time that you were experiencing, I'll tell you this, truly from the bottom of my heart, people who started learning trading here, this is the worst time to learn trading. This is the worst. Because in a bull market, everyone thinks they're a genius. The people who picked it up here, they will struggle. They will eventually struggle. The best time to pick it up was actually, if I'm not wrong, this time here, 2022, 2023. This was the best time to be picking up trading. It is the best time. If you picked it up there, you would have experienced, well, firstly, we've experienced lots of volatility, right? And if you were very diligent in putting in the work, you would have also enjoyed the bull run. So this best time for many different reasons. Yeah, so please do spend some time to do that. And I will talk about this very importantly now, because I talked about a major seller right here. Right, remember this major seller here? This is important. I told you the major seller will probably appear this coming week. I told you it will not happen on Friday because they want to expire everyone out, and you see it happen for yourself, right? It will not happen on Friday. I told you they have to expire all the puts that were placed in the market. So this is context. If you're a new trader, you learn to piece together context. With my experience, you hijack my experience, and with your own personal experience as well, as you trade along with me, trade along with people in the community, you learn and you record everything you learn. You develop a strong trading brain, right? So this is context. We know that's going to happen partly because of context. And I mentioned if they want to dump it, well, not really dump, but probably a 5-day retest is coming, right? Because 5 days catching up, right? Both bulls and bears will want to do that. And you realize just on Saturday, this happened, right? So you understand, even insiders, allegedly, even insiders, they want to use liquidity. Remember, I mentioned it's easier to swim together with the current than to swim against it. It's the same. It's the same for the insiders. They want to do that. And that's why we are able sometimes to pick up some clues with liquidity in the market. Now, we'll talk about that shortly later. But generally speaking, you have to be patient to wait at least 4 to 5 day moving average if this wants to pull back down, right? This is important. This is truly very important. You have to understand this. Now, at this point here, I think the bottom Bollinger will start to trend up slightly now for a larger downward movement, right? For that to happen, I do think at least the bottom Bollinger must return back to above where we were at the low, right? So it's going to take some time. So what does this mean? It means that if you're taking, for example, just gambling away 630 puts, you are throwing your money away, right? Especially if you're doing short term. If you're doing long term, you can afford to wait, right? It's better to take a spread instead, because when you take a spread, you protect your position, but yet you can still take the long put if it heads down, right? So you cut off your losing leg and you allow the long put to head down. So spreads are a skill that you need to learn eventually for that, right? And you noticed, as I mentioned, 200-day moving average, right? It's still up there. And if this happens, you have time to catch the downtrend, right? So just be more patient, right? Don't be just shorting this now. Some of you just do things as a cause and effect, which is, it's simple, yes, but it's not logical. It's you simplify trading too much that it becomes illogical, right? If you want to simplify something, the basic premise of simplifying something is that it still must remain logical. You understand that, right? So simple doesn't mean that it's logical or it's right. So likewise for your life decisions, right? Sometimes we simplify our life decisions, right? We allow the impulse or our poor instincts to take control and they are no longer logical. So you have to at least have the baseline that your decisions are at least logical. People short this because they think that it's buying too much, right? It's too green. Too green, therefore short. Please tell me this is not the right way to make trading decisions. In your mind, you have to be logical, right? And that means when something is logical, when something is rational, it means that you must be able to base it on, well, in mathematics, what we call the formulas, right? You must have formulas. You must be able to formulate something. You must be able to have metrics. You must be able to plug in numbers. You must be able to equate something. So that's important. If you lack different variables, and that's the thing about equations, right? So, well, if you back to high school math, yeah, right? So you need to have, well, let's just do a very simple polynomial, yeah, just a very simple polynomial, yeah. Right, very simple. You just have to learn to plug in, right? So you definitely need both sides of the equation. And the point is that you need to plug in your variables. When you're able to plug in your variables, you're able to equate something. Now, life is a mathematical formula. Now, polynomials are well, it's a very general term, but life is not as simple as this simple, very simple polynomial. But yet it's made up of variables. So when you can simplify life, you simplify life by reducing as many variables as you can. It's the same as trading. In trading, you must simplify your variables. And this is why it's as simple as a structure, for example. You know when your entry is, you know where your stop loss is, you know where your protection is. Done. As simple as that. And you know where to take your win. It's as simple as that. But yet, these simple variables are illogical. Many people, their entries, they are arbitrary. It's random. Many people's stop loss, it's random. It's based on their P&L. It's based on a number that doesn't matter on the charts. When do you protect? It's also arbitrary. And you realize it's an illogical equation. So the point is this. Apart from simplifying something, right? And simplifying something means you must have the variables plugged into your equation. You simplify as many of your equations as possible. And then you must make sure they are not arbitrary. They must be numbers that you can be able to dictate or find out or equate. Now, when you understand that, right, and you realize how important now math is. Now, math is not just about solving equations, right? It's a way of life. It's a systematic thinking. It's a problem-solving ability. So it's important. Yeah, it's important. And when you're trading, you cannot escape numbers. You cannot escape systematic thinking. You cannot escape arithmetic. You cannot escape, well, obviously, I don't think you'll be doing well, about trading options, it's calculus, right? You don't need to know all that. But the general approach of this, you have to understand that this is a way of life. It's the system of thinking. And when you can be able to do that, this becomes very easy to master because you have put in the proper template and all you got to do is to plug in the right parameters into that template. You understand that, yes? So now, at this point, let's talk about what's coming up for the week. We'll talk about first. At this point, I've always mentioned to you the blue algorithm. It's obvious the blue exists. And how do you tell? Because we have been building liquidity here, and it bounced back up strongly from that blue. Right? It happened here again. This also happened. Right? You can see the very clear blue, and we see the bounce from there. So this blue algorithm is there. They were controlling that. Now the selling only happened here on that day, right? They exist. This seller exists. In fact, I want a stronger seller. There is a stronger seller, but very briefly, not even meaningful in the 30-minute chart. Not even meaningful yet. So if this wants to head down, and you cannot be trading the news, because the news, as I mentioned in the last training video, the news is always either too early or too late. And how do you tell? You see, that's another arbitrary factor. Because you look at news as just the news, but you ignore the time of the news, the timing of the news. So we look at things in one dimension, but the market reacts in things in 3, 4 dimensions. I talked about this in a previous video. So if you remember the talk about dimensions, right? So this is important to shape your thinking, about how you view the charts. It's not hard. You don't need all these advanced knowledge. You just need to learn to simplify things and be logical in your simplification. That's it. How simple can this be? We're trading only one ticker, only SPY. There are day traders I know that are just scanning stocks, and you realize how much more arbitrary that becomes, how many more variables that creates, how much more difficult it is for them to stack their skills to get better each and every day. When you have too many variables, you cannot build it up. But by trading, you see how I try to simplify this. It's as simple as the 4 variables that I mentioned earlier. Your entry, right? Your stop loss, your protection, and how to cut your winners. Or in this case, as I always mention, nurturing your winners. Using only one ticker. This ticker here, SPY, can help you trade the ES, help you trade the SPX, help you trade the QQQ, the NASDAQ, or even some mega caps, right? Some of you use this skill to trade Nvidia, trade Tesla, Apple, Microsoft. You realize it's stackable. So now let's talk about. I'm sorry, can you hear me? I'm afraid I muted my microphone. Can you please just let me know that you can hear me clearly? I don't have any technical difficulties. Yeah, all right, thanks. That's important. Just imagine I'm rambling and rambling and rambling, and all you hear are crickets. Just imagine that, yeah. But anyway, thank you. Thanks for a response. Now, let's carry on. Now, at this point here, you have to understand where we're going to go, right? The blue algorithm here, I talked about this blue algorithm here. You see the different stages of the blue algorithm, isn't it? But what's important is the orange. You have to pay close attention to the orange here. Now, the first layer here is when your 5-day moving average is going to meet. Right, the first layer here, if this truly wants to head down, I've always told you, you are not going to miss it. So many things and confirmations you can wait for. Right, the first one will obviously be the orange here and the blue, right? Together with the 5-day moving average, you will not miss it. You will see the orange seller at least appearing. And in the midst of the orange seller, you will see the green seller appearing briefly, hopefully briefly. But if you're day trading, you want it as sustained as possible, right? So level by level, algorithm by algorithm. Now, as you head down the level, you will see cups starting to close. So the next cup that needs to close will be the 697 yellow. This is a very, very important level. By then, you will see your blue algorithm starting to get retested again. Now, I don't know whether it's going to happen on Monday, Tuesday, Wednesday, or we even get there. But you prepare because you know the liquidity is there. By then, your 5-day will already start to turn into resistance. Now, when this happens, your 5-day will start tapering and start trending down. When it starts to trend down, you know, well, there could be a sustained downside. But remember how to be looking out for the sustained downside. You have to be looking out for that bottom Bollinger to start heading up. Becomes an easier target if the bears want to go back and revisit it again. So we've seen this many, many times, right? In every uptrend, right? Okay, let's use some example here. In this uptrend here, you see how the bottom Bollinger took some time to head up. Right? Once it started heading up, it becomes an easier target. You see the pullback happening to the 20-day moving average, right? It started moving up again, and it started retesting the 20-day moving average. And it started trending up again, and it started retesting the bottom Bollinger for more liquidity to push up. You notice, bottom Bollinger 2 has to catch up, because otherwise, there's a lot of buying in this range here. How much buying is there? How much buying? Your 200-day moving average is still there. Your 20-day moving average is going there. This is liquidity. This is liquidity. We've not even talked about the 5-day, which I talked about then. Liquidity, liquidity, liquidity. So some of you, you're wasting money trying to bet for a crash. If it comes, you will make money. Believe me, instead of just wasting money before it happens. Right? And some of you just wants to call the top. You cannot call the top reliably especially when it's in the strongest algorithm. I've talked about this many times as well. How many times have I told you if it's buying in the strongest algorithm here? And this is why I told you the green was very important. If it's buying in the green and you are shorting this, you become exit liquidity. The term exit liquidity means that you allow the buyers, which is so much more in volume than the sellers, right, to buy up your share. Because you're shorting this, they buy you up and you continue to head up. That's the term, that's the definition of exit liquidity. And this is why you see the squeeze happening. So I'm trying to explain the squeeze in terms like that. Right. Now, if this wants to dump, you truly, truly will not miss it, because we have another very, very major liquidity level here. This is major. Now, anything that wants to head down will have to pass through this blue liquidity before it heads down easily. Your 20-day moving average may take time to start trending to there. It will get there eventually. Does it mean we head down when the 20-day meets this liquidity? No, but it's ideal. If they have a way, an insider, alleged insider, or they have negative news they want to release, this will be the best time to do it if that happens, instead of doing it now. Why fight the current? If they truly want this to head down below, they will let it wait. They will allow it to wait, because you don't want to be fighting the 5-day together with the 20-day, together with the 200-day, right? Now, upsides, however, now we've completed the talk about the downside. You understand that now. Let's talk a little bit about the upside. Unfortunately, you cannot chase as well. This is great for runners, and that's fine, right? We caught it here. We caught it. Now, let me explain where we caught certain trades here. We caught it at the bottom Bollinger several times. You averaged down. That's fine. You caught it at the 5-day when it turned support a couple of times. You caught it when the 20-day liquidity was very obvious here, right? We caught it here. We caught it here at the other 5-day retest once. We remember that day when we were talking about soaking up sellers, right? Let me just find that day. This day, right? We were talking about soaking up sellers. You have to watch this Wednesday's end of day summary together with the video. This is a very important day. This day, you would probably have learned so much more, because the market gave you an opportunity for you to learn. This is a very important day. You have to learn. Right? So let's watch this. This video is very important, because you notice we had that very large bounce up here. This helps a lot. Now, from then on, you have to understand, get out of here if you don't want to be watching this. Don't waste your time. Don't waste your time, yeah? If you don't want to learn, that's fine. Or you can have your audience for your own. Go, start your own stream. I'll watch it. Now, at this point here, you cannot be chasing. You truly cannot, because there are plenty of opportunities already here. You see it for yourself. Go watch the videos. You have very clear opportunities already. At this point, you have to wait for structure. This has been trending up. It's great for runners, right? If you're taking very large positions, you have to be very careful. On a day trading basis, that's fine. But you realize as we approach Thursday and Friday, right, members? When you realize as we approach Thursday and Friday, I started scaling down very, very large. I scaled down quite a bit, because it's chasing. It's a sort of discipline you need to have. If it lacks structure, as I always tell you, if it lacks a key structure, now this was a clear structure, right? This was clear. This was good. But as we lack structure, you have to start scaling down. That's just how it is. You want to see that the orange starts to show a little bit. You want to see that the magenta start to show. 5-day showing some strength before this starts heading up here. So wait, be careful, be clear on the structure here as well. Now, last week was an obvious squeeze because there were lots of short liquidity. That's why there's a squeeze. Right? That's why when there is an overbuying event, right? So many people say, it's overbuying. You can short this, you can short this. So the point about overbuying is that there is just so much liquidity, especially in with the monthly options that are expiring. So when people start fueling it by shorting it further, they have to cover their positions, right? So when you're a short seller, you have to cover your positions. How do you do that? You buy. Or when you get margin called, what happens? You buy. And that's what it means by having a squeeze, because even the people who intend to short, they have to buy. And that was a one-time thing, because there was a positive catalyst into the market that on a week where monthly options are expiring, in a week where people shorted this heavily, and we had all the liquidity clues that I was showing you. So once again, back to the start of the video where I mentioned this, when you're able to learn context and link it into your technical analysis, this becomes so much clearer for you. And this is known as your trading brain. Develop it. You have to do this through experience. Hijack my experience. Trade and show up every day. This is the way to accelerate your learning. You have to think of learning as a form of acceleration. What are the logical ways to accelerate your learning? You have to be realistic with learning, right? Like flying a plane. You can't rush it. You can't just watch a video and then start flying a plane, for example. So you have to understand there are ways and means to accelerate the learning. So for example, you fly every day. You practice every day. If it's not on a real plane, at least on a simulator. Or as they always say, mental flying or chair flying, that's also one technique. So the point is, there are ways to accelerate your learning, or you start to watch others do it, right? So now with YouTube, you can literally watch other people do it, and that's one way of hijacking experience. So we live in a world today where you can literally hijack another person's experience. So spend your time wisely and hijacking other people's experience, hijacking other people's knowledge, instead of watching brainless stuff that will deteriorate your brain. Right? So now, very importantly, you understand we have to wait for structure. Monday, allow the market to build liquidity. Now remember last Monday that happened, right? So let's zoom back into Monday. And I told you Monday, Tuesday. Well, Monday is actually a good day, right? The entire week we were just squeezing, right? And I was warning. I was warning throughout the week not to short this because the context was there, right? You prepare to short, you prepare for the possibility to short this, but you don't do it. But anyway, Monday, if we start building liquidity, I'd like to see that, right? I would want to see 5 days start to build liquidity. I would want to see the liquidity here starting to build. If we do start to chop within the range here, this would be actually ideal as we approach the week. So on Monday, just be a little bit more careful, right? Allow the liquidity to build. I know there will be knee-jerk reactions right at 6 p.m. Wait for Asia to open. Wait for London to open. There will be a lot of volatility on Monday pre-market. So if you're trading Monday pre-markets, promise me just scale down. Don't start your week and ruin it immediately before the US market opens. Can you imagine that? You ruin your week before even our market opens. Imagine that. Don't do that, all right? So allow liquidity to build. We have the entire full week to be making profits and finding profits in the charts. Yes, I understand that. Yeah. All right. So you're prepared. It always comes like that in the squeeze. You see it for yourself, right? There will be pullbacks, right? These are your red candles. It will come. But how many times have you seen after a squeeze that it goes straight down back to bottom Bollinger? How many times? See it for yourself. This one only, right? When was this? October 10th. Only this. When that happens, I'll review October 10th again. But when it happens, you will not miss it. It will be a trend day. You will see and that's the beauty of what we're doing here. You will see the control algorithms at work all the time. Now, I will label soon. I will start to have labels for the end of day summary. So for example, trend days, I will label them trend days, right? If there is a clear head and shoulder pattern, I want to start labeling them. So I'm using some AI tools to help me with that. I think it will be great if I start to include tags or categories into the different trading days. So you see, I'm trying to deconstruct the information a little bit more, right? So you see it happening. Yes, but rarely. And it's always when the bottom Bollinger has already caught up. The only time if this heads down back to the bottom Bollinger, you and I should be really worried if that happens, right? Because the stock market should be the last thing on your mind. Right, if this happens, right, something really bad will probably have happened, right? And obviously, the market will be halted. So don't worry, allow the liquidity to start catching up. And this is why part of the trading is this, that on the 1 minute chart, right, we want to find profits in the charts every day as well. So we've got the solution for that. And I've always taught you that even in the 1 minute chart, you just need half a point, 1 point, if you're able to find profits in the charts with that sort of precision. And I just want you to see on Friday that we are able to identify this. And tell me in what world are you able to precisely determine the movement of a stock that has hundreds of billions of capitalization, of liquidity every single day, that you can control it in a way to the penny of how it moves. Look at this yourself. And this was only because we are able to identify the pink and magenta. You identified the wedge, you would have avoided trading this, and to the point that you can even see that it has went to 0 point, literally to the penny in this wedge here. When you can do that, when you have the power to do that, when you have the ability and the skill to do that, you can do so much more on the trading floor. You can take precision trades. And there is actually a precision trade I want to talk about here in the second part of the video. Right, so this is just the early prep. You have to understand how to be prepping yourself in your mind, right? A very simple review from last week. And obviously, I'm prepping you for the macro structure here. And this is just the primer, because I'm going to prep you every single day as well. As the market opens, as we trade, as you prep every single day. This is why, just show up, right? Even if you don't understand 100% of what I'm talking about, just show up. You realize you get better and better at this, right? So let's deal with this together. We are in this together. I'm sure you're not the only one showing up. In fact, I think I'm showing up more than you are. So let's do it together. This is why we show up for each other. And that's why we work hard for each other.